I thought Rich Dad was my legacy when I left Rich Dad. I said, what am I going to do? But then I realized, nope, somebody upstairs had a lot more for me to do. And that's when I got the call from President Bush and Sir Bush and Obama. And then I got the call from the Napoleon Hill Foundation. So when one door closes, other doors of opportunity open. But sometimes you have to close a door for other doors to open.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome to another episode on Wealth Strategy Secrets of the Ultra Wealthy. I'm your host, Dave Wolcott, and today I'm honored to be joined by a true legend in the world of financial literacy and entrepreneurship, Sharon Lechter. Sharon is the co-author of Rich Dad, Poor Dad, the #1 personal finance book of all time. She's a CPA, best-selling author, and former advisor to 2 U.S. presidents on financial education. Her mission? To elevate financial IQ around the world. In this episode, we take you behind the scenes of the Rich Dad story, how it started, why it struck a global nerve, and the legacy it's still building today. We explore Sharon's top wealth building principles, dive deep into real asset strategies, and expose the truth about Wall Street's version of diversification. You'll learn why assets are sexy, how to make debt work for you, and what to teach your kids if you want to break the cycle of financial ignorance in your family for good. This conversation is packed with timeless wisdom and modern strategies for investing in uncertain times. So if you're serious about financial freedom, this is one episode you don't want to miss. Let's dive in. Sharon, welcome to the show.
Well, thank you, Dave. I'm delighted to be with you.
It's such a pleasure to have you on the show, Sharon. And as we were talking, this is just such a fantastic opportunity to really have you in person here, to really share with the audience, your mission, which so much aligns with ours. And I believe is the true systemic issue. One of the largest issues, quite frankly, within this country, really around financial education and, getting smarter. And it all starts in the schools, which is completely lacking in today's schools. And, whether you're a doctor, a lawyer, an engineer, an entrepreneur, or someone of trade, we're just not taught financial education anywhere. And so the work that you've done with Robert has literally changed millions of lives. I can't tell you how many people I've run into that have read the purple pill and, taken it. And, it's really changed the trajectory of their lives, including myself. I think one thing that would be really fascinating is to put together another book, today and just talk about the use cases of how many people, took these concepts that you guys originally had and really put out to the market, really a different way of thinking and seeing how that's really just taken off, right? And there's just so many different examples of that. And I think that's really aspirational for much of our audience, right? How can we grow our wealth outside of Wall Street, getting out of that casino, taking control of our financial future? So with that as a backdrop, I'd love for you to help share the original story with, how did you meet, Robert, and really kind of come up, with the idea around Rich Dad, Poor Dad, and really putting that together.
Well, thank you, Dave. I appreciate it. It actually starts at my dining room table when I was a kid at 10. I used to have to scrub out bathrooms between tenants and real estate properties my dad owned. And we would talk about assets. We would talk about cash flow. We would talk about liabilities at the dinner table. I didn't realize what a unique upbringing I had until I got out into the real world. He owned orange groves. He said, the oranges give me cash flow. The orange groves are going to give me appreciation. And some of those orange groves are part of SeaWorld in Florida right now. And so I learned kind of from the inside out the importance of the word assets. It happens to be my favorite word on earth. Assets are sexy, another one of my taglines. And I realized when I got out into the real world, I got my degree in accounting and I was fast track in public accounting, how few people understood money. And they're taught to go chase money, exchange your time for money. And as a CPA in public accounting, I learned how many businesses succeeded, but probably more important, I learned how many businesses failed. And vast majority of them failed because they didn't understand money. They didn't understand time value of money. And it was something that I just said, this is something people need to learn. And I realized what a great benefit I had having the parents I did. So fast forward a few years, I started a company called Sight and Sound. It was talking children's book because successful businesses solve a problem or serve a need. Our kids didn't like to read. And in that company, it was a new technology. At that time, back in 1987, kids didn't have screens. They didn't have electronics. It's dinosaur day. I know you can't imagine a time when kids didn't have screens. But we said, how can we get parents to trust us because we have this new gadget? Well, we did deals with Disney, Warner Brothers, Sesame Street, and that helped us expand that goal to do the first children's talking book around the world. And so I learned a lot about publishing, a lot about licensing, a lot about international trade. Sold that company in 91 and we relocated to Arizona. And our oldest son went off to college and came home in credit card debt. He left in September, came home in December. And he got to the college campuses and there were tables, free pizza, free money, free t-shirt, free money. And he had a really good time his first semester in college until the bills came due. And came home December of 1992 and asked us to bail him out, which we did not do. But that was when I dedicated the rest of my career to financial education, December of 92. Fast forward a few years, I got a call from Mike in 96. He said, I met this guy that has an idea for a board game that I think you might want to see. And so I met Robert at the very first beta test for the game Cashflow. It was drawn out on a piece of butcher block paper. The different caliber bullets were playing pieces. So it was kind of an interesting first impression. But I was the only one that got out of the rat race at that beta test. But I loved it because it was so consistent with what I was doing with schools at the time to try and get our children to learn about money from a standpoint of assets, not paychecks. And so I just volunteered as a friend to Robert to help him commercialize it because I had all the connections, I had all the resources to help do that. And in the process, he told me he wanted to charge $200 for the board game. And this is 1996. I said, that's kind of pricey for a board game. Maybe you should write a brochure to explain the philosophy that would encourage people to invest in it. And that's when he asked me to be his partner. And I helped him write that brochure. And that brochure was actually Rich Dad, Poor Dad. We never expected it to take on a life of its own. We never expected to write 15 books. We said, oh, people wanted more. Well, let's do a trilogy. Rich Dad, Poor Dad, Cashflow Quadrant, Rich Dad's Guide to Investing. Oh, no, they wanted more. So over our 10 years that we were equal partners, I was CEO of the company. I was able to expand it around the world to build the largest personal finance brand in the world. But we wrote 15 books together. I launched the Rich Dad Advisor series, and we had multiple audio and other products. And it was really an opportunity to educate people on how to think about money in a different way, how to move from a scarcity mindset to an abundance mindset. But that we actually met through my husband. Mike's a well-known international intellectual property and licensing attorney. So that's how we originally met.
Wow, such a fantastic story. And, I can remember the first time reading it, I think in about 1999, I mean, shortly after it had just come out. And one of the things, so, for me, the concepts of, just thinking differently around your wealth, right? And really understanding. And I had kind of just transitioned out of the military, right? So I had absolutely no idea how did the world work, right? In terms of financial constructs and such. But how it was really portrayed, right? This concept of how money is moving around, and then the analogy, right, of the rich dad, poor dad, thought was so great from really a strategic perspective. But one of the key contributions I think you made, as well as Tom Wheelwright, who's also been on the show, is your financial prowess, and really talking about it from that kind of CPA perspective and really the numbers, right? Because once you kind of get past rich dad, poor dad, you get your head around it. Okay, I need to change my thinking right this way. I'm on board. And that's very strategic. And I know so many people have done that. It's kind of like, okay, 101, right? We're going to shift our thinking this way, and you gravitate to that. But then the biggest question I think a lot of people have is, okay, what's next, right? I can invest in real estate, but wow, there's a lot to do there. And I think the real light bulb for me was Cashflow Quadrant, right? Mm-hmm. And just really taking that complexity and simplifying it into that simple quadrant, which to this day holds so true. We talk to that, with our kids, with our clients, with our partners, with everyone. And it's just such a simple but powerful concept. Love it. Yeah. Sharon's holding up a copy of the book. Yeah. So it was so great. But Sharon, you really brought this whole element of getting a little deeper, right, into, kind of the accounting and how we could kind of make this real.
Well, I think it's so important, Dave. We've got, if you think about the overall messaging of Rich Dad Poor Dad, it was very contextual, and it really have to do that to get people to expand their thinking and say, okay, maybe I should be thinking differently. But then when you get to that point, you have to somehow give them the map to how to take that contextual change and make it a reality. And that's actually one of the reasons I launched the Rich Dad Advisor series, because those were content experts that could go deeper into their individual subjects, while we can maintain that contextual of not letting people go smaller in their thinking because of fear. Because the number one thing you deal with money is fear. People are afraid of it. They don't know it. They're not taught about it. And therefore, they're afraid they're never going to have enough, or they're afraid they're going to lose it when they get it. And that scarcity mindset is because we're not teaching kids about money in school. So I appreciate the compliment very much. My number one goal was not to speak to people as a CPA talking down to people, but as an individual saying, here, let's think about it in this manner, in a way that wasn't threatening, that wasn't intimidating, because money can be an intimidating subject.
Yeah. And also, let's face it, Sharon, I mean, this is completely contrarian viewpoint. This is completely contrarian to Wall Street, accumulation theory, building for retirement. So why don't we transition to that? And let's, from your perspective, tell us about, where are we in the state of, financial education today, as a country, as a society? What's holding us back?
Well, just 5 years ago, there were only 5 or 6 states out of the 50 states that required a personal finance class for high school graduation. Today, we're up to 26, but it's still not enough. We need all 50 states, because I had an interview last week that says, how do you bridge the gap between the haves and the have-nots? It's education. And if we make sure every child is armed with financial education in school, that levels the playing field. If you think about some of our world's billionaires, they started from very meager beginnings, but they learned how to buy, build, and create assets. If you look at, let's talk about the Wall Street casino a little bit. 40 years ago, the Fortune 500 companies, their value was 85% bricks and mortar, 15% intangible. Today, that's more than flipped. Over 90% of the valuation of Fortune 500 companies is intangible. It's, through systems. It's their branding. Think about Airbnb, largest hotel. They own no hotels, right? The hospitality industry, the Uber, they own no physical vehicles. It's all in the software, Amazon. And so it allows us to compete a little bit better because today assets come from your brain, right? Intellectual property. And we talk about asset categories when a financial planner talks to you about diversifying your assets. They're talking about stocks, bonds, mutual funds. When I talk, or I think probably when you talk about diversifying assets, it's against asset categories, businesses, real estate, paper assets, intellectual property, commodities, all of those things, digital currencies. And so when you can diversify across asset categories, you give yourself the best way to stay solid and continue moving no matter what happens in the market. And when we talk about asset valuation, it's about momentum of your money. People want to put money in a savings account, then your money's going in the wrong direction because inflation is still higher than savings rate. And so think about the velocity of your money. Is it moving in the right direction?
Yeah, 100%. We run a virtual family office and spend a lot of time with family offices. And it's very interesting because I think they are some of the best professional investors, in the world, really, and how they look at asset allocation, endowment groups, family offices. It is true diversification, right? Not Wall Street's definition. And frankly, the old model of 60-40 it doesn't work anymore, right? It's completely upside down in today's market. And of course, now we have even new assets, coming to bear like cryptocurrency. And you mentioned just a really big one that I think we should highlight, right? Which is intellectual property. Right, we are in a knowledge-driven economy, right, and that intellectual property is worth so much. So how can we kind of tap into that? But one of the things that also I'd like to get your prerogative on, right, and I love that around assets being sexy. So part of our investment thesis is that we focus on real assets that are non-correlated to the stock market and really have what I like to call a trifecta or a three-dimensional return profile, which is you can drive cash flow, you can drive tax efficiency, and forced appreciation in the asset. So in that way, and real estate is a perfect example of that, right? You can actually, win on the upside by 3x or protect your downside, right? Maybe your passive income isn't that high, but you may have a really big exit, right? So you have three ways to kind of hedge the downside. And if I compare that to, let's say, equities, right? Unless you're day trading, most people are just hoping that value is going to go up in the future. What do you think?
Buy, hold, and pray.
Yeah.
No, you're absolutely right. And I think it's really important for people to become more strategic investors and understand that you have to actively manage your portfolio. And you need to say, how can I best advance this? There are people that, we teach them about the importance of real estate. Well, if you also have to understand the tax implications of the real estate. Do you have ordinary income that can be offset by it? Or are you not going to get the benefit of the depreciation? You need to go in understanding that. And that's the beauty of family offices, because they're looking at the whole picture and they're looking at all of the assets combined and how do they come together and give you the greatest lift in the overall portfolio. And that's why it's important to have the right advisors on your team, people that try to do it on their own, unless you can't be an expert in everything anymore. So you need to have those experts on your team.
Yeah. Shannon, if you could just kind of break it down to, let's say, your top 5 pieces of wisdom on financial IQ, what would they be?
Assets feed you, liabilities eat you, and understand that there's good debt and bad debt, and be really honest with yourself as to what your debt, how do you categorize that good debt? Because good debt helps accelerate your pathway to wealth. Bad debt basically you're putting your money down your toilet. So it's really important to be honest with yourself on good debt versus bad debt. It's also important to make sure, who are you listening to? You reference the cash flow quadrant. Think about the 5 people you spend the most time with. What segment of the cash flow quadrant are they in? And one piece of advice that I have, whether it's related to money or just life, I say, when was the last time you did something for the first time? Think about that. That's what keeps you stepping outside your comfort zone. That's what keeps you meeting new people. That's what helps you identify new opportunities. And in order to maintain your vitality and your youthfulness, you need to continue learning and growing. So challenge yourself to do something new for the first time, and you will find new people, new opportunities, and new revenue streams. And my last bit of advice is successful businesses either solve problems or serve needs. We have a lot of problems and a lot of needs. And so think about how you can solve a problem or serve a need and create an economic model around it so that you're doing well personally by doing good in the world.
Yeah. Wow. Fantastic. Let's unpack those a little bit. Too tempting to move on from there. So let's talk about debt a little bit. And especially right now where we're seeing the commercial real estate industry, being, severely impacted by deals that were put together in 21, 22. I mean, even the greats such as Kenny McElroy, a lot of well-known operators having challenges and across different asset classes, not only multifamily, but office and some other things, primarily driven by the unprecedented rise in interest rates. That was kind of uncontrollable. So I like how you said, right, debt can be good or bad, right? So what are your thoughts around, leveraging debt, and how do people know, kind of what's a good LTV for them, if they will, or if, let's say, they're looking at a deal, how do you figure out, right, what's comfortable, right?
Well, that's a great question, Dave. And I guess the standard accountant's response to that is it depends, because you need to have somebody who understands your own personal financial situation. But what we're seeing in the commercial market, we're not necessarily seeing it in the residential market, because what happened was they got into these loans and they had balloons, and now they're facing balloons and they're having a hard time refinancing their properties, and it's causing them financial stress. And part of that is maybe over leveraging. Certainly in 07 and 08, that was a massive issue. Over leveraging, predator lending, all of that stuff caused a huge collapse. When you look at today's residential market, over 60% of the homes in America have no debt, and or their debt's under 4%. So there's a tremendous amount of equity in the residential market in this country, which gives us a fundamental strength that was not there in 2007, 2008. But it's also adding to the tension in the market between the sellers and the buyers. All right. That tension is going to go somewhere. You're going to see some people get more creative in their financing. You're going to see more seller financing, because buyers are getting more and more risk-taking on wanting to buy a property, and the sellers are starting to give a lot more seller concessions. We're going to see the same thing in the commercial market, but the problem is there's a lot bigger issues, right? Instead of a small house, if they've got a huge commercial building, the problem gets bigger, so the bank gets involved. And so it's really important to to really see what you can do to hedge the downsides, because there are large organizations coming in and helping pick up those multi-housing properties that are having trouble. And you're going to see more and more of that. And I think you're going to see a little easing towards the end of the year. Obviously, the Federal Reserve is being a little obstinate about the interest rates, but I do believe we're going to see a reduction, at least one, if not two, before the end of the year.
Oh, interesting. Yeah, that's a hot topic for sure. And who is going to be, in the Fed as by the end of the year, we'll have to see. But that I think that would be quite a material change, right? Is if if they took a point or two, things came down. Certainly, that creates the other challenge, right? We're having, which is actually a great segue. And I know, Robert has tons of theory and perspective on this, but love to get your take as well, which is really that you know printing of fiat currency, debasement of the dollar, and not only the dollar, but let's look globally. So any fiat currency, really, in the times we're in, what are your thoughts on that? Do you think we need to go back to a gold standard? How does crypto tie into this, and how should people really be thinking about the value of the dollar?
Hey, it's Dave Wolcott here. Let me ask you something. Are you tired of the same old financial advice that leaves you spinning your wheels? If you're ready to discover the real secrets the ultra wealthy use to build unstoppable wealth, then I've got something just for you. My new book, The Holistic Wealth Strategy, is your ticket to learning the proven strategies that the top 1% don't want you to know. This book isn't just about money. It's about building a life of purpose, freedom, and lasting impact. And I want to give you a free copy. Visit holisticwealthstrategy.com and get yours today. It's time to level up your financial game and create the future you deserve.
Well, we talked about diversification earlier, and it applies here tremendously. There is no doubt that the U.S. dollar valuation today is significantly less than it was 50 years ago, and the purchasing power is very different. Digital currency is here to stay. Crypto, whichever digital currency you want to invest in, is here to stay. You're seeing a little bit more of an acceptance from governments as well. And so again, there's still a lot of risk. You don't bet the food you need to eat on in crypto, but it certainly has had a nice run up this year, and it's probably continuing up in that direction. So make sure you pay attention to it to see how best you can hand that. I don't think there are pundits out there that are thinking that we have the demise of the U.S. dollar coming very quickly. I'm not one of those pundits. I do believe that value has been hurt significantly. I do have significant gold and silver, which is an important thing to help you, because that's not a currency that is, if you have physical gold and silver, it's not being controlled. The government doesn't know about it. So it gives you the ability to have that safety net for yourself and your family. And the value of gold and silver is going to maintain itself. So it gives you the ability, gold from a value perspective, silver from a currency perspective. So for those Nostradamus and end of the world, that's where you're going to have your value that's going to help you survive. So I believe in all of those things. And I believe that the U.S. dollar against other currencies right now is still behaving a little bit. So you have that. But the dollar is not going to go away, I don't think. It's going to be severely impacted. And so you need to protect yourself as much as you can.
Yeah, great prerogative there. And I think if we look at, history, right, and especially with a lot of other nations, it's really not something that happens overnight. It's just that constant kind of debasement, really.
I think our federal debt is, throughout history, if we print a lot of money and the valuation comes down, we can pay off our debt with a lot cheaper dollar. And I think we're seeing a move in that direction here, because our federal deficit is just out of control.
Yeah.
And the only way we're going to be able to deal with it or get it somewhat in control is by, again, lots of money being printed to pay off debt at a smaller valuation US dollar. So.
Okay, I really want to unpack that, right, and highlight that for the audience, because I think a lot of people completely miss that point, and it's never calculated in any return profiles, pro formas, or anything when you're thinking about an investment. And that point is that when you're investing in something like real estate that has long-term debt associated to it, you're paying off that debt with future dollars that are worth less in the future than they are today. So as a CPA, how would you actually try to quantify that, in your decisioning process, your diligence of an investment opportunity?
Well, there's all kinds of calculations you can do, time value of money. But that's the benefit of having, I talk about the benefit of real estate. You put down 80%, borrow 20% or 10 or 30%. You put down 20%, you borrow the balance. All right. And you still own 100% of the property. You still own 100% of the tax benefits. You have 100% of the depreciation, and you have 100% of the appreciation. That's what I call the ultimate leverage. So you have a $1 million asset, and maybe you put down 200K, 100K. And so you have an incredible opportunity for cash on cash return. And that debt is going to be paid off by your tenant. And so that debt's being paid down by tenant money, tenant dollars. And over time, if the value of the dollar is going down, you're paying off that debt at much more quickly than you would have if the dollar was rising. And so these are all calculations that can be made, but you want to look at necessarily the cash flow as your way for debt service. And if it's going to give you enough of a margin that gives you a cushion no matter what happens to the dollar.
Got it. How would you advise, or let's say give some advice in today's economic cycle to the audience, right? It's certainly been a turbulent year, as it really always has been. But it feels like maybe, we're kind of leveling things out. The administration has been in place now half of the year. Maybe people are getting numb to all the changes that are happening on a weekly basis. But should investors be, bullish right now? But should they be bearish? How should people be reacting in the state of the market today?
Well, as you can tell, I've been around a long time. So I was making lucrative real estate deals when the interest rates were at 15, 16, 17%. It's all in the numbers, all right? And so we look at this horrendous 7% interest rate and we think the sky is falling. Is the deal make sense at 7%? There are lots of deals out there that still make sense at 7%. But it also opens the door for creative financing. As I mentioned earlier, sellers who really want to sell a property can get a great tax benefit by being the bank, doing seller financing. You have a lot of money sitting on the sidelines. And so even these large commercial properties you're talking about, what I'm seeing is not a bank coming in, but a private institution, private lenders, hard money coming in to take over those properties at a reduction of their fair market value. So they're getting a better deal because they've got the money to solve a problem for the current mortgage holder. And so those are all things that are happening right now. And that's why it's not an easy market, but it can be a creative market if you know what you're doing or you partner with someone who knows what they're doing. Because real estate's not going away. In times of uncertainty, we talk about the 5 Gs, see if I can remember them. Ground, which is real estate, gold, guns, grub, and gas. Those are the things that we are always going to need. And so thinking about trying to recession-proof your portfolio, think in those references.
That's great. Can you give us any of your top takeaways in terms of the latest big, beautiful tax act, that just came out, and your thoughts there?
Well, there's lots of takeaways, but certainly the estate tax deduction going to $15 million is fantastic. That's going to help a lot of people. And of course, that's going to be the wealthier benefit. But at the same time, most of their money has been taxed along the way. So I don't necessarily think that it's a bad thing. the actual tax bill, bringing back in bonus depreciation, extending the things for tax benefits that were going to go away at this end of the year is huge benefit to our small businesses out there, being able to benefit them for capital investment. And that's what an economy needs to be able to grow. And you're going to see big companies, little companies start to invest in their infrastructure because they have the ability to have the tax benefits. Certainly, the no tax on tips and is going to be a great boon for those in the lower to middle class markets. That's going to help them from a standpoint of getting their feet on the ground. It's going to help childcare expenses is going to be very beneficial. Certainly no tax on Social Security is going to help our senior citizens. And so all of those are targeted to populations that need the help the quickest. And I think we're going to see a real benefit to our market in general and to people, families' personal wealth from the result of some of these cuts.
Right. What advice can you give us for our kids? Right. I know it's so interesting, right? Because I believe that the psychology of money, right, is really 80% of this game. And I'd like to get your guesstimate as well. But we kind of started the conversation around scarcity of money, and a good way for people to kind of think about that is to answer the question: when I was growing up, money was fill in the blank, and for me, it was scarce. And I think for a lot of people, it was in our generation. So there is a lot of psychological hurdles to take place to shift to that abundant mindset and try to change that. But we also now we have a responsibility to really change that for our children and future generations, which I know you've been such an instrumental part in that. So what type of advice would you provide for us, to educate our kids going off into the future?
Absolutely. I do always recommend couples when they get together to have what I call a money date, go out to dinner and talk about what your respective parents' philosophies were about money, because it will reveal a lot of things that may happen between you as a couple when it comes to money. So it's very important because we are, the phrase, the rich get richer, the poor get poorer, is because we learn about money at home. And as it relates to your children, be a mentor, not an enabler. That's a powerful statement because too many of our parents today are enablers, and the kids don't have to work for anything and they just expect it. They get a handout. And all of us are guilty of having said, I can't afford it. If you think about that, I can't afford it. That's a negative statement. You want to turn off the lights and get under the covers, right? It's negative. It feeds into scarcity. So I say, stop yourself and say, how can I afford it? You feel the difference? It opens your mind. It triggers your subconscious entrepreneurial spirit, and it goes to work coming up with ideas you can afford what you want. Same thing with your children. Johnny, Mary, we can't afford it. Well, that's the end of it. It's depressing. They go cry somewhere. Instead, say, Johnny, Mary, what can you do to afford it? And those little kids get very creative, and they go to work and find things that they can do to earn the money to get what they want. Let them earn it as long as it's legal. Let them earn it, let them buy it, and then celebrate with them, because the greatest reward you have is not that they've earned it and made this, but you see their self-confidence grow. And that self-confidence, once a child knows that they can earn money on their own and they can achieve what they want and achieve their goals, there's no stopping them. But what we're doing in the real world is handing them money. I kind of liken it to the old science fair when our kids are in school. Fourth grade, you go into the science fair and you can immediately see which ones mom and dad did instead of the kid. And so you think you're being a great parent. So the next year, when it comes around to science fair, the kids say, they don't believe I can do it on my own. I'm just going to let mom do it. So instead of helping your child, you've actually disabled your child. And they've given up on the idea. They've given up on wanting to do anything on our own. And it's really important for us to be able to understand how to make a child yearn for something better, and that they have the ability inside them. The original word for education, educati, Greek, means to draw out, not to drill in. Our children are instruments of brilliance. We just need to keep them curious. And when you think about school, I come back to the statement I asked early on about as an adult. When was the last time you did something for the first time? Curiosity is what helps us become a lifelong learner. That curiosity kind of gets drummed out of our kids in school because they're taught conformity. And they go out and they get a career, they start making money, they get comfortable, and then they get complacent. Then we have a crisis in our life, and it throws us into chaos. And how do we get out of that chaos? By becoming curious and creative again. So as a parent, maintain curiosity and creativity in your child's life and allow them to thirst for knowledge, thirst for new experiences. And that's going to give them that self-confidence that they can do anything they want to.
That's so powerful, Sharon. Thank you for sharing that. That's really evidenced, I think, by people looking at legacy. And I believe the numbers are quite staggering, frankly. That's almost 80% of wealth is lost by G2. And it's even significantly more than that by G3. Right, which really enunciates that point that you're making, right, around that. And I know it's very challenging for my generation because of all the things that we didn't have. We're trying to make up for it by giving to our kids. But just as you point out, it's actually doing them a disservice.
Well, you mentioned family offices that you're involved in. Some of the most successful family offices that I know have part of their program as an educational program for the next generations, to educate them about stewardship, about investing, so that doesn't happen. Because you're right, it does. It happens all the time. Because the kids are raised in wealth, but they're not taught how to preserve that wealth, and it's such an important issue.
Sharon, tell us about your legacy.
Well, my legacy, actually, there's a sign right over my shoulder here. My team gave me, my legacy is helping other people create their legacies. And I love that because it really is true. My greatest joy comes from helping other people find their portfolio, find their mission in life. I was raised by a dad, the same dad that taught me about money. He's asked me every day, Sharon, did you add value to someone's life today? So he's been gone almost 20 years, but I still ask myself that. Wouldn't the world be a better place if everybody focused on adding value to other people's lives? So that's my legacy is I thought Rich Dad was my legacy when I left Rich Dad. I said, what am I going to do? But then I realized, nope. Somebody upstairs had a lot more for me to do. And that's when I got the call from President Bush and Sir Bush and Obama. And then I got the call from the Napoleon Hill Foundation. So when one door closes, other doors of opportunity open. But sometimes you have to close a door for other doors to open.
Yeah. No, and another way to say your earlier comment was just do something scary every day.
Yeah.
Right. And kind of put yourself out of that comfort zone. And I think not only your comments around, what kids are doing and, your legacy comments, but that's sage advice for all of us, right? We have to surround ourselves with, that's the Jim Rohn quote of being a product of the 5 people that you spend most of your time with. And I love your overlay, by the way, on the Cashflow quadrant. That's such a cool way to articulate that. I haven't thought about it that way, but I know most of our listeners are on the right side of the quadrant, either B's or I's or both, right? That's what we're really focused on. But just fantastic advice. And really, I can't thank you enough again for your mission and serving. I mean, you've literally changed the lives of millions of people. And I think that systemically, this is just a massive problem in the country, globally, education. So we can all take on that mission, right? And think about how can we're listening to this podcast today, so that's a great job for the audience. But how can you now educate someone else in your family, your kids, your peers, others on thinking a little bit differently, and taking some responsibility in terms of your own investing instead of just outsourcing it, to someone else. So in closing, Sharon, if you could give just one piece of advice to the audience about how they could change their wealth trajectory, what would it be?
Focus on buying, building, and creating income-producing assets. Because you are financially free when the income from your assets exceeds your monthly expenses. Repeat that. You're financially free when the income from your assets exceeds your monthly expenses, because assets are working for you 24/7. No personality problems. They're working for you. And we hear the terms like mailbox money, passive income. But that's not focus on the income, focus on the asset. And how many assets can you have? As many as you can get. When you're working for money, there's only so many hours in the day, that left side of the quadrant. So move to the right side. And as I said, assets are sexy. And the older you get, the sexier they become.
Love it. Sharon, if people want to learn more about you, you have so many different resources, your books, and also, it's pretty exciting. You have a new course coming out. If you'd like to share some information on that.
Absolutely. I would invite you to visit my website, SharonLechter.com. You can also email me at info@SharonLechter.com. I do a lot of high-level mentoring. I host retreats at our ranch, CherryCreekLodge.com, twice a year. So please check that out as well. Would love to hear from you. Of course, I'm on LinkedIn, Instagram, Facebook. Would love to have everybody connect with me. And I would welcome anyone to ask questions, send something to me. My new course is Investing in Uncertain Times. I also have a real estate investing course, a Money Master. We have lots of different courses. So come to SharonLechter.com and check it out. But usually, as I said during my talk, when I get mad about something, I start another company. So people were so flipping out about investing, I started this Investing in Uncertain Times, where we do a deep dive in all the various asset categories and how to best position your portfolio to not be hurt by these downturns we're seeing.
Awesome. Thanks so much, Sharon. Really appreciate it.
Thank you, Dave, and appreciate the opportunity.
Thanks for listening to this episode of Wealth Strategy Secrets. If you'd like to get a free copy of the book, go to holisticwealthstrategy.com. That's holisticwealthstrategy.com. If you'd like to learn more about upcoming opportunities at Pantheon, please visit pantheoninvest.com. That's pantheoninvest.com.